Good morning, everyone. Kunal Kalla here from the Fundamental Research Team. Let us start the morning meeting. So, US market yesterday were negative. Dow fell by 0.84%, whereas Nasdaq fell by 1.17%. The sentiment in the US market has not been positive for quite a few days now. As we spoke last time, dollar index bottomed out at say 99.7 and has been rising since then. This has been leading to FI outflows in the emerging markets, and the same trend continues in Indian market also. So if we try to see where today the dollar index is at 103.3 right now. It touched a peak of 103.45. And right now it is roughly on a daily moving average is at 200-day moving average. So this is a make or break point for dollar index. Brent crude after touching a high of 87 has started melting down marginally. So that is a respite for India. But FI flows will totally be dependent upon how US yields are going to move in the future in coming days, and definitely how the dollar index will behave. So US 10-year yield was 4.4 2-3 days back, which has now melted down to 4.24% as on today market. So our index Nifty is expected to open flat to 24 to 30 points positive. So friends, today what we will do, I think enough of discussions with the market. We all know that it's a stock specific action in the markets. Action is more in the mid and small cap space at this point of time where the larger gains are happening. And I think 300 to 400 point further correction in the market will not make a significant difference in terms of gains which will happen at stocks level. So it depends upon the conviction in the individual stocks where the stories are shaping up pretty well. Today what we will try to do, we will try to touch some odd stories which are usually neither covered by us nor by anybody else. But there's a lot of stock actions happening over there. So disclaimer is that this is not a buy and sell recommendation on these stocks. It is just an awareness exercise of what is happening in these stocks. So I will be covering 5-6 stocks in that context. So the first stock, which is actually a micro cap, which is in limelight nowadays, is UFO films. UFO movies, sorry. UFO movies is basically a company with a 430 crore market cap, and it is basically into theater advertising. It also helps exhibitors to digitalize their content and exhibit in theater. It also gives rentals to single theaters and some of the multiplex chains beyond PVR and INOX, which are not big chains. There may be few theaters to give equipment on rental to exhibit movies. So these are the three revenue streams for them. What happened post-COVID, advertising revenue slowed down for almost all companies, and hence in that context, theatrical advertising revenue slowed down for them also. Now, what is happening in last few days, if you have seen, some mega blockbuster hits have come, and that is improving the outlook for theatrical advertising and exhibition business also. So in that way, the UFO movie outlook is improving. If we see the last quarter, they have reported a good turnaround in the EBITDA margins. So before COVID, they were doing in FY20, they did a EBITDA of 120 crore, and which was on the declining spree during the COVID time, and post recovery was also quite slow post COVID. But now in last quarter, they have done a EBITDA of 16 crore. So from 120 crore now they are coming back to something like 70 to 75 crore annualized rate, and the market cap is 427 crore. So that is why the stock is seeing a lot of action because of this revival in the numbers. The other stock which is seeing a lot of reaction is Himmat Singh Sade. We earlier also talked about this story, but now it is at a different level. 138, 139, the stock price market cap is roughly 1,300 crore. Again, this is a small cap. The story here is last quarter there was a very big turnaround in the towel and bedsheet business globally. There was an inventory restocking. Both and Welspun as well as Himmat reported solid numbers. In that context, Himmat before COVID did a huge capex. They had around 2,600 crore debt on their balance sheet, and that became a problem during the COVID time because margins fell from 18% to 7-8% at EBITDA level. Now, what has happened in this restocking in last quarter? The margins have revived. So last quarter they have reported an EBITDA of 148 crore and profit of 29 crore. So last quarter was exceptional because of the restocking and the margins were 22%. But in good times, their EBITDA margins remain between 15 to 18%. If we consider that picture on a consistent basis, they can do an EBITDA of 500 crore. And since the debt is high, so they have to pay to 40 to 50 crore as interest annually. But going forward, since they are not doing any big capex, we see the debt will come down and market cap will improve. So if I try to see stock, it is just 2.5 times EBITDA at market cap level. At EV to EBITDA, it will look like 6-7 because of the huge debt, but that is where the story is. In future, the debt will come down and that will translate into the market cap. So this is another interesting story which is shaping up in this quarter post the turnaround. Another story where we have a lot of news flow nowadays, and this is Ralliger Enterprise. In fact, there was a buzz around 2 days back of a big block deal by one of the prominent family on Ralliger Enterprise. So people were wondering what is in this company after the Parvinder Singh family is totally holding nothing in this company, right? So the shareholding is distributed between FI, DIs, and public, with public holding majority of the shareholding. But among public also, it's actually few funds, global funds, which are holding some holdings. The angle here to understand is in Ralliger Enterprise, there is a 64% holding in Core Health, which is an unlisted entity. Core Health is basically like Star Health, majorly is a healthcare insurance player, and they're sixth largest in the country. If we go by the private unquoted share value,
Kunal, it's Care Health, na? Care Health.
The market cap of that company is 20,000 crore, and this company Ralliger Enterprise holds 65% in that. So roughly the value of that entity, if we take it in books of Ralliger Enterprise, is roughly 13,000 crore as on today. Market cap of Ralliger Enterprise is 7,200 crore. In addition to this, Ralliger Enterprise has a broking business and lending business. They're not very big at this stage and they're not contributing heavily to the profitability. But at least one can take a 1,500 to 2,000 crore incremental market cap from these two businesses on a conservative basis as a coupon. So when we look from that angle, roughly this is 50 to 60% discount to the intrinsic value in case of Ralliger Enterprise. How this will be unlocked, none of us know. There will be some events in the future. Either the company may be acquired by some big family, or there may be a listing of Core Healthcare in the public market. So at this stage, nothing can be said about that. That can unlock the value. Other stock which has done a good buzz after the quarterly earning is Godfrey Phillips. This is a cigarette company, Modi Group company, predominantly a cigarette company because 90% of the revenue is coming from cigarette. 10% of the revenue is coming from retail and restaurant business. But retail and restaurant business is not making money. So 100% of the profitability is coming from cigarette business. Last quarter, they reported exceptional EBITDA and exceptional profit of 254 crore, which was much higher as compared to the averages of the last few quarters. And this was on the back that they started exporting tobacco also in the international market, which boosted their sales. But once we see that on a conservative basis, even if they have reported 254 crore EBITDA in this quarter, because the tax rate was also 16%, which is low for them, in this quarter. But on a conservative basis, they can have a run rate of around 200 to 220 crore per quarter going forward. This company on an average trades at 15 time price to earning, and the market cap right now is 11,000 crore. So this market cap, if we take the median price earning and profitability, which the way is going to shape up, can have a median market cap of 13,000 to 14,000 crore in the future. So this was an update from my side on some of odd mid and small cap companies. In addition to this, we also have reviewed Suntech Realty, Karnataka Bank, Jammu and Kashmir Bank. So at some other time, we will discuss those stocks also. So for the time being, considering the time constraint, I will hand it over to the technical team.
Thank you, Kunal. Good morning, everyone. This is Soni from Derivative Desk. So, continuously we've seen for the third day in a row where, GIFT Nifty is indicating a gap down scenario for our markets. So, likely today also it is indicating at a 50 to 80 points of a gap down. Nifty has been tested, that 19,300 odd levels as a support. Let us understand from the derivatives data point of view whether this time that support is going to hold or it looks like it may break. If we start with the FI's outlook as of yesterday's, the outlook is quite negative because they sold in cash, they sold in index futures and very heavy selling in stock futures. Plus combined, they have bought very heavily in index options. So this is indicating a negative outlook. Plus, your India VIX is also closing above 12 for the second day. Now, for 2 series, we have witnessed VIX remaining below that 12 range. Now it is breaking above that range and it is closed above 12, which is indicating that the uncertainty could be back in the markets, and this may create a lot of volatility also as well. Your long short ratio also, if you look at it, has dropped significantly from 70 odd levels, 70% of longs, and now it is remaining below 45%. It is continuing below 40% for the last 2 days. So even this is on a weaker side, or it is rather giving you an outlook of a cautious approach. If we look at the Nifty's new weekly expiry options data, it is suggesting that highest open interest is at 19,400 call and 19,500 call, and both of these strike prices are starting more than 1 lakh contracts each. On the put side, it is immediately at 19,300 put with only 68,000 contracts, followed by 19,000 put with 50,000 contracts. So you can see the ratio. If 19,400 and 19,500 call have 1 lakh contracts, the put side, it's like 50% lesser of the total open interest, which is indicating that call writers are more aggressive in the market than put writers. If we Nifty futures yesterday has witnessed short build up to the tune of 3.5%, and its PCR closed at 1.06. Of course, this is sans the expired contracts of yesterday, not included. So both of these data combined, it is also indicating that Nifty is giving you quite a cautious outlook. In fact, if we have to diagnose the FI's data for all the indices put together, the options buying that they have shown of 38,000 crores, it is only coming on it's only for Nifty majorly. So Nifty is holding a far cautious outlook than in comparison to the other indices. If we look at just the intraday's resistance, so it has come down to the band of 19,400 to 19,500. So that band is going to hold. Most likely 19,450, 19,460 is going to be the spot level for intraday resistance. The support is going to be in 19,300 to 19,260, that level. If this support is breaking, then Nifty can see more panic selling. Interesting to observe is that Nifty's resistance has been constantly dropping. Like it started from 19,800, then it came down to 19,600, then 19,500, and now it is even coming to 19,400. So you can see how Nifty's resistance is like dropping south, whereas 19,300 as its support is getting tested multiple times. The more it gets tested, the weaker it will become, and more likely that this support of 19,300 to 19,260, that band, it will break. And if it breaks, you will see more panic selling in the market when Nifty can actually head towards 19,100 to 19,000 odd levels also. Coming to Bank Nifty, Bank Nifty witnessed open interest additions to the tune of 5.6% with mostly flat price closing. It is indicating more like indecisiveness. If we look at the options chain for Bank Nifty's upcoming weekly expiry, the highest open interest is at 44,000 call with 1.19 lakh contracts, followed by 44,500 call with 81,000 contracts. It is indicating at an immediate resistance of 44,100 spot level. So the last three sessions we've noticed that Bank Nifty is facing that resistance of 44,100, 120 odd levels. Moment it touches that, you can see some supply zone in the Bank Nifty. So as long as that level is not crossed, it is difficult for Bank Nifty to show any strength. If it crosses 44,100 spot, then perhaps it can extend the small rally towards 44,500 at max. However, at higher levels also, you would see resistance coming in the market. On the lower side, the 43,800 to 43,600 is a long range where you can see some support in Bank Nifty. However, it is not very decisively strong support in the for Bank Nifty, because most likely the support of 43,600 can also break, and in that case Bank Nifty can also fall till 43,000. So in both the Nifty and Bank Nifty comparison data, Bank Nifty is looking slightly better than Nifty as of now. If we look at Fin Nifty, so Fin Nifty yesterday witnessed long unwinding to the tune of 0.9% only. Its OPCR is closed at 0.91. So Fin Nifty is indicating more like a sideways trend. The highest open interest on the put side for Fin Nifty is at 19,500, followed by 19,000 put, which is indicating that your immediate support is still in the range of 19,500 to 19,430. If this breaks, then only Fin Nifty can see some downside movement till 19,100 to 19,000 levels. On the call side, multiple resistances have been formed in Fin Nifty, like starting with 19,500, 19,600, 19,900, 19,950. So it's a multiple resistances. This is as per the options data that is indicated. But technically, if we see, the immediate resistance has come down to 19,630, followed by 19,720. So you will see almost every 100 points of resistance showing in Fin Nifty as well, which is unlikely for Fin Nifty to cross these resistances and see some strength. So more likely, it is also indicating that right now the sideways trend can actually be broken on the lower end of the sideways trend. And if ultimately 19,430 is breaking its spot level, it's breaking in Fin Nifty, you will also see a fall till 19,100 to 19,000 odd levels. If we so these are the indices outlook. The actionable would be, yesterday we have initiated a monthly expiry buy call in 19,000 put in Nifty. It has given in the range of 30 to 40 rupees. You can buy, accumulate in that range. So you can treat it like a 0-0 call, because the stop loss is given of 1. And if 19,300 to 19,250, that support band breaks in Nifty, we will see a sharp fall also. And expecting that it will break and it will come down to 19,100 to 19,000 levels. So this 19,000 put buy given, the target is set for 80 to 120. So this is the actionable, and that's it from Derivative Desk. I'll hand over this call to the next speaker. Thank you.
Thank you, Sony. Good morning, all. Just this side for the currency and commodity update. The US initial jobless claim declined to 239,000 in the week ended 12th August, which exceeded the expectations. However, the continuing jobless claim rose to 1.716 million in the week ended 5th August, which is the highest level in last 4 weeks. The Philadelphia Fed manufacturing survey showed a significant positive surprise by rising from 13.5 to 12. Overall, by the Fed meeting minutes, the members are quite positive on the further rate hike if inflation doesn't come into their control. As well as if you look at the scenarios like the dollar index, which is continuously moving higher, though yesterday it ended on a flat note, but the structure is still positive. The US USD CNH, which is the Chinese currency yuan, which is depreciating against the US dollar, is also favoring the momentum in the USD against the INR. as well as the rising US bond yield. So all the factors indicates that there is a possibility that rupee may underperform the USD and US dollar, and we can see further depreciation in the Indian currency. As of now, dollar index remains positive, and till the time it holds above 102.50, there is a possibility of a bounce up to around 105 to 106 levels. Uh, Yesterday, there was a possibility that the Chinese central bank intervened at the higher level, and thus we had seen a marginal dip in the USD CNY, but overall sentiment still remains positive, as well as the US 10-year bond yield is currently hovering near to the 11 years high. It made a high of 4.33 in October 2022, and yesterday's high was 4.32%. So it's hovering around its 12-year high, and as of now, there is no sign of reversal on that. That clearly indicates that one should not remain on the short side in the USD INR. Yesterday, though, the USD INR ended on a flattish note after the volatile move, but it is hovering above the breakout level, and till the time it holds 82.90 level, we can see a further bounce back in the USD INR. Yesterday, we had seen RBI intervening in the NDF as well as in the opening trade itself to keep the volatility in check and to bring down the USD/INR below 83 mark. And in coming days as well, we may see further more intervention coming from the RBI. But overall fundamentals are still in favor of the USD, and thus the biasness remains positive. If we talk about the options data, 83 call option of the monthly expiry is having the highest open interest, while on the put side, 82 followed by 83 strike is having the highest open interest. Now the call writers are still holding 83 strike, and thus there is a possibility that 83.30 can be a minor hurdle for the USD/INR spot in coming days, but considering the overall scenario, we are expecting the USD/INR to eventually move towards 83, 82, 84 levels in coming 3 to 4 weeks. So view clearly remains on the positive side. Till the time it holds above 82.90, one should do the buy on dip strategy on the USD/INR and play more on the option side by either bull call spread or by getting long into 83.25 call options. When it comes to commodities, gold ended the day with a loss of around 0.5%. It is expected to remain sideways to a bit on the negative side with a support around 57,800 to 58,000, while on the upside, resistance can be seen around 58,700 levels. Silver, on the contrary, move up by around 0.5% and outperform the gold prices. We are continuously mentioning that the silver is moving near its support levels and there is a possibility of a bounce. In fact, from last 2-3 trading days, we are giving the buy trades as well, and which are working perfectly in line with our expectations. So as of now, the crucial support for silver is placed in the zone of 69,000 to 69,300 levels. Any dip up to around that level shall be used as a buying opportunity. On the upside, we are expecting the prices to move up to 72,000 levels in coming few days. While the crude September future witnessed a good recovery from the lower levels and ended with a gain of around 1/3%. Overall structure indicates that the crude prices may remain sideways in today's trading day with a support around 6,540, and on the upside resistance is around 6,780 levels. So that's it from the currency and commodity side. Now we are open for Q&A.